50-year mortgages. It sounds like a hack to make homes affordable again. Smaller monthly payments, problem solved, right? Not so fast. Here's the pitch. You'll hear stretch the loan to 50 years payment drops, making it easier to buy. But the price you pay for that lower monthly number is massive. Let me show you the math. Say I buy a $400,000 home. At a 7% interest rate, a standard 30-year mortgage is about $2,660 a month. A 50-year might drop that to roughly $2,400. That feels like a win. Until I look at total cost. Over 30 years, I pay about $558,000 in interest. Over 50 years, around $1,044,000 in interest. That's almost $500,000 more just for the privilege of a smaller monthly payment. And that's if the interest rate is the same. In reality, lenders usually charge higher rates for longer, riskier loans. If that 50-year rate ticks up to, say, 7.5%, the lifetime interest jumps to roughly $1.14 million. It solves the monthly payment on paper, but makes the house far more expensive overall. And remember, banks price for risk, not your dream. You'll hear talk of 50-year loans as a solution in some policy circles. But length alone doesn't fix affordability, cost does. There's more. You build equity painfully slowly. If prices dip even a little, you can get stuck underwater because you've barely paid principal. You're paying more interest for longer, while taxes, insurance, and maintenance keep piling on. Refinancing isn't guaranteed. If rates rise or lending tightens, you may be stuck with a costlier loan. Real affordability starts with supply building more homes efficiently. Longer debt terms don't create homes, they just stretch payments. Even if a plan promotes 50-year mortgages, the math doesn't change. Lower monthly payments can mask a far higher lifetime cost. Look at APR, not just headline rates. Bigger down payments beat longer terms. Focus on price to income and price to rent, not just monthly. More supply, smarter zoning, and efficient builds improve affordability. 50 years sounds convenient, but convenience can be the costliest line item. No matter who proposes it, do the lifetime math. Ask your lender for the full amortization, total interest, and APR. Pursue paths that lower prices, not just stretch payments. 50-year mortgages, what is your opinion?